Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Booking Holdings Inc. quarterly report. Booking Holdings Inc. provides a wide range of online and traditional travel and restaurant services through its subsidiaries. The company's main businesses include online accommodation reservations through Booking.com, discount travel reservations, services through Priceline, travel-related insurance, products, restaurant management services, to restaurants, advertising services, online meta search service for comparing travel itineraries and prices through Kayak, online restaurant reservation services through OpenTable. Additionally, the company offers various other services such as flight, rental car, and vacation package reservations, cruise and activity bookings, hotel distribution services for partners and affiliates, ground transportation, and activities reservation services through Agoda. The stock price of Booking Holdings Inc. BKNG has increased by 16.48% over the past year due to several key factors. Consistent earnings beats have been a major contributor, with the company surpassing analyst expectations in each of its quarterly earnings reports. Strong performances in Q3 and Q4 2025 were particularly notable, with room nights growing by 8%, gross bookings increasing by 14%, and revenue rising by 13%. Additionally, positive analyst sentiment and price targets have contributed to the stock's growth, with a consensus buy rating and an average price target forecast of a 13.98% increase in the stock price over the next year. Booking Holdings' strategic company initiatives, such as investing in artificial intelligence, AI, and digital transformation, have also driven growth in alternative accommodations and connected trips. The company's transformation program has led to increased annual savings forecasts, further boosting investor confidence. Furthermore, the resilient travel demand has allowed Booking Holdings to capitalize on a rebounding travel industry. Overall, the combination of strong earnings reports, positive analyst sentiment, strategic initiatives, and robust travel demand have all contributed to the significant increase in Booking Holdings' stock price over the past year. The primary drivers of revenue growth or decline can be identified through an analysis of the financial summary. Revenue growth is primarily driven by merchant revenues, which increased by 23.3% and 25% in the 3 and 9 months ended September 30, 2025, respectively. This growth was largely due to the expansion of accommodation reservation services at Booking.com. Advertising and other revenues also contributed to revenue growth, increasing by 14.1% and 10.3% in the same periods. The growth in total gross bookings, which increased year-over-year by 14% and 11%, further supported revenue growth. On the other hand, agency revenues declined due to the ongoing shift from agency to merchant revenues at Booking.com, resulting in a decrease of 6.7% and 7.3% in the 3 and 9 months ended September 30, 2025, respectively. However, changes in foreign currency exchange rates had a 4% benefit in the third quarter of 2025, which can be considered neutral. Net income and profit margins. A shift in performance. The financial performance of a company has undergone significant changes, particularly in net income and profit margins. In Q3 2025, the net income rose to $2,748 billion from $2,517 billion in Q3 2024, indicating an increase. However, on a year-to-date (YTD) basis, the net income decreased by approximately 17.6% to $3,976 billion from $4,814 billion in YTD 2024. Profit margins also experienced fluctuations. The operating income margin increased to 38.7% in Q3 2025 from 39.9% in Q3 2024, but declined to 33.2% in YTD 2025 from 32.1% in YTD 2024. Conversely, the net income margin decreased to 30.6% in Q3 2025 from 31.7% in Q3 2024, and further dropped to 19.4% in YTD 2025 from 26.2% in YTD 2024. The reasons behind these changes are attributed to a $180 million impairment charge at the Kayak reporting unit, reduced forecasted cash flows, and increased customer acquisition costs at Kayak. These factors have contributed to the decline in net income and profit margins, indicating a shift in the company's financial performance. The company is indeed generating positive operating cash flow. The financial data from both page 15 and page 44 confirm this trend, with net cash provided by operating activities increasing to $7,919 million in 2025 compared to $7,602 million in 2024. This indicates a steady growth in the company's ability to generate cash from its core operations, signaling a healthy financial position. The company's debt level and interest expenses have undergone significant changes over the past year. While total outstanding debt has increased by a modest $132, long-term debt has risen from $14,853 million to $15,997 million, indicating a growing financial burden. Conversely, short-term debt has decreased from $1,745 million to $999 million. Interest expenses have also seen fluctuations. Although interest expense has decreased by $4 million, interest payments have increased by $132 million, suggesting that the company is paying more in interest despite lower interest rates. Interest income has declined by $79 million, further contributing to the company's financial strain. Management's outlook on company strategy. The company aims to provide a best-in-class experience for travelers and partners by navigating geopolitical challenges with a strong financial position. To achieve this, management plans to invest in innovation, marketing, technology, personnel, and customer service while optimizing expenses. The goal is to create an ideal traveler experience through increased loyalty, direct bookings, and merchant-based transactions. With sufficient cash balances and access to capital markets, the company is confident in its ability to fund operations and explore strategic alternatives like acquisitions. The company has a history of returning value to its shareholders through both dividend payments and share buybacks. In terms of dividends, the company has paid out significant amounts in recent years, with $941 million paid in 2025 and $885 million in 2024. Additionally, the company has an authorized program to repurchase up to $20 billion of common stock, with a remaining authorization of $23.9 billion as of September 30, 2025. That concludes the financial summary for Booking Holdings Inc. Feel free to comment below, and I will be happy to answer them when possible.